Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I was just looking at some charts. I just wanted to share with everybody what the charts are saying. And we've got the CRB index in relationship to stocks. It is rallying higher. It's breaking out. So we're starting to see the split where commodities goes up and S&P 500 goes down at the same time. And that's what's going to light this commodity ratio on fire, the commodity to S&P 500 ratio. And what I have in the background here, I'll get out of the way here. That's commodities right here, or the ratio, sorry. The ratio is right here. We broke out of this resistance line to the upside. It's a pattern if you want to draw the bottom line, but it's a pattern. We broke to the upside and it's been rocketing higher, which means that the CRB is drastically outperforming stocks. So if you look at the components of this ratio here, this is the CRB. And we've been moving on up in this channel, and we're right about to break to the upside of the channel. I want to watch this tomorrow to see if we break to the upside for the commodity CRB index. Because if we break to the upside, we could see a big move. And my gut feeling and the way looking at some of these commodities and charts is that we're going to see a big move to the upside from a highly inflationary wave coming, is what I'm seeing. And then looking at the S&P 500, that's what this chart is here. We are breaking to the downside. So what we did is we were in this upward channel. You can even draw it like it's a ascending wedge. We broke to the downside, came up and retested, and now we're heading lower. We're selling off. And that could be due to a higher 10-year yield, because yields have gone higher. But we are due for a correction, and the ratio was telling us that commodities are vastly underpriced, and that if interest rates were to go up, that the S&P 500 would most likely go down. Now, there could be some stickiness between, in some of the companies that we hold that go down with the S&P 500 or NASDAQ or whatever it is in the beginning. Maybe some of these large diversified mining companies are getting caught in the crosshairs with this. And we have to watch and monitor and see what happens, because I don't have all the answers for everybody. The market's going to do what it wants to do. Looking at oil, oil is still looking strong. It has paused here, but I don't see a reversal pattern. I don't see big selling pressure. I think it may continue higher depending on what we see in the markets tomorrow. Let's see what it brings us. But oil is looking at least decent. Looking at the 10-year U.S. Treasury yield, this is moving on higher. And if this continues higher, I think it's going to be a huge headwind for stocks, a tailwind for commodities and oil. If this continues higher, I bet you're going to see oil go higher with the yields going higher. That's just kind of my guess. Looking at the dollar is strengthening, and it broke to the upside. We get a little sell-off day here today, but it's probably going to go higher still. So we're seeing a strengthening dollar, which is a weird mix. We're seeing a strengthening dollar and a commodity boom happen at the same time. So they must be really printing a lot of money everywhere in this world. And we're in a highly inflationary environment all around the world, which is going to be a massive commodity boom. Massive. And the driver here, I'm going to zoom out a little bit. This is the housing starts right here. New privately owned housing starts. Looks like I got cut off here. We'll go all the way down. It cut me off a little bit. But this is the average. This is the homes that we didn't build in the yellow down here. And we're starting to come into an expansionary phase right now. Last commodity bull market started here in this expansion phase right at the beginning. The other one started right in here, which is the beginning of this expansion phase. And we have another commodity buy signal against stocks where commodities are cheap valuation-wise, and we're right at the beginning of an expansion phase. So we have incredibly good market conditions, which is good. So what I think is coming here, looking at these charts, I mean, let's see if the CRB index continues to go higher and if stocks continue to go lower. If we see this huge divergence, I mean, that's exactly what we want to happen over a long period of time, where our commodity companies go way higher in relationship to stocks. Because when we rotate in the future, or the way that we want to rotate here, I think commodities and precious metals are good now. And I know precious metals have been going down, but they're going to turn. They're always the laggard of the commodity group. When these all go up, and when we have this large expansionary phase of real estate come, I think that commodities are going to get priced way higher. The stock market's going to go down to sideways for the majority of that time. We're going to get repriced against stocks quite dramatically. The next move at a hypersupply phase, when inventories get refilled in real estate, where you want to go next is either the dollar or bonds, but that's going to be a ways away. Interest rates should be a lot higher. Bonds should be the play, because you're going to go when interest rates are high, you're going to see a real estate market kind of fall over and crash. It may not crash big. It may be a small 2% pullback, whatever it is. And then you're going to see interest rates go down. They're going to lower interest rates. That'll push your bond prices up. When stocks crash and they're done crashing with commodities, the next play, in my opinion, was probably to buy stocks in a recovery phase of real estate. I don't know how big that recovery phase is, because it depends on how many homes we build and how out of balance that residential real estate market gets. If the balance is pretty tight, we'll probably have just a normal bull market in stocks. But stocks are going to get crushed between now, which is an increasing interest rate environment, and that crash in the future, whenever that happens and you buy it at the bottom of the crash, when we start coming back up in a recovery phase of real estate. And that's where we are going to make a ton of money, because you're going to have a ton of money from commodities. You sell those commodities, you go into bonds, you get another 20, 30%, 40% on the crash, and then you rotate it into stocks, and then you're going to have a big bull market in the recovery phase of real estate, like we had for the past 10, 11 years. So that's the play. You can see kind of in this video and the charts here what's performing, what it looks like. I think the overall stock market doesn't look too well. I don't think we have a huge crash in front of us. And the reason, a huge crash of everything. The huge crash of everything comes from real estate, and real estate looks good and strong. If we were going to have a crash in real estate, and if we were going to have a crash in the stock market and commodities and everything, you would see the 10-year drop. It would be dropping. It's going up. And what that's happening is it's going to contain, this is my opinion, it's going to contain the crash to stocks and bonds. The crash will happen there, and it may be a little sticky with a couple of our investments in the beginning. Then they'll break, commodities go higher, and real estate goes higher with higher interest rates. That is what I've been saying on the channel. I'm going to stick to that outlook and thesis. And if that were to materialize in that way, we are going to win very large against bonds and stocks with commodities and precious metals. This is the environment that I think is ripe for that asset repricing, where the ratios are going to change against each other. If you guys like this analysis, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.